You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 20th day of August, 2024. Thanks so much for joining us. Wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 every trading day. The first one is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, just go to mytradingiq.com, and at the very top of the page, there's a link, 5-day free trial, no credit card required, and a purple button. Just click that button, fill out the registration form. Make sure you take a minute and fill it out properly, because if you don't, it's an automated process and we'll never see it. But if you take a minute and fill it out properly, we will see it, and we will do our best to get your desktop set up today, your indicators indicating today, and then your trial will officially begin tomorrow, which is Wednesday, middle of the week. But you never have to worry about what day of the week or weekend or hour of the day you sign up for the trial. You'll always get 5 consecutive trading days, even if it stretches over a weekend. The weekends don't count against the 5-day trial. However, there are markets that do trade over the weekend. Now, when the live training room ends each morning at 11:30 a.m. Eastern, you take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's a couple different ways you can join this broadcast live. Best way, I'll give you first. You only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click that link. Fill out that 30-second registration form, and you're done. Going forward, what will happen, you'll get an email every trading day about an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, so really all you have to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And for those who are new to the world of CFRN, it's a great way to get to know who we really are. Not just today or this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. Just pick some days at random. Watch a little bit, fast forward a little bit, jump to another day, week, month, year. Watch a little bit, fast forward a little bit. You get the idea. It really does give you a pretty clear view of how we've evolved over the years. In fact, you can go back as far as 8 years. In the beginning, in 2005, we weren't broadcasting on YouTube. In fact, way back in 2005, it was just an audio broadcast. Then we brought in the live charts, and then we started the YouTube recordings. So anyway, lots of information out there for you, lots of history, and it's all 100% free. All right, this is our daily schedule, which we try to stick to as best we can. So we'll dive into our daily devotional, and our devotional this week, the official title is Faithful Man or Woman, Devotions for Living in Faithless Times. And you don't have to go too far. I don't know, maybe as far as your TV, to see what faithless times we're living in. Our scripture today is Matthew 5, verses 38 through 42. And I'll share with you from the Message translation. Here's another old saying that deserves a second look. Eye for eye, tooth for tooth. Is that going to get us anywhere? Here's what I propose. Don't hit back at all. If someone strikes you, you stand there and take it. If someone drags you into court and sues for the shirt off your back, gift wrap your best coat and make a present of it. And if someone takes unfair advantage of you, use the occasion to practice the servant life. No more tit-for-tat stuff. Live generously. Now, those were the words of Jesus in Matthew 5, verses 38 through 42. In a more distant past, it was normal to conscript someone into forced labor. Well, that's come back. A lot of those Russian soldiers are considered conscripts. They didn't want to go to war, but they were drafted and sent anyway. Parallel there is pretty clear. Conscription means the compulsory enlistment for a service to be performed. Many of you I know are old enough to remember when we had the draft here during the Vietnam War, or conflict as politicians like to call it. More recently, this word was used to describe the draft that brought, as I said, young soldiers into the armed forces. Both meanings suggest involuntary service. Jesus knew this kind of service was a normal part of life in his culture. Therefore, he told his disciples that if they found themselves forced to help someone, they shouldn't stop at the bare minimum. Rather, they should set the bar much higher and do even more than they were asked. This response didn't stem from a desire for recognition. It proved they were Christians who represented God. After all, if they were to treat others as if they were accommodating God himself, then why would it matter if anyone was paying attention? Think about what your life would be like if God behaved like we do sometimes. Would he say, "Sorry, can't help you right now. I'm on the clock"? Never. That's just not who he is. Other people's needs will never be met if you lack empathy. God tells us that we should go above and beyond to help others. After all, isn't that what he did for us? So, when you answer someone's call for help, do you go beyond what's needed or stop once the minimum is reached? How does God's example help you see the right response? Join me in a word of prayer. Heavenly Father, thank you for teaching us the power of grace and humility through the words of Jesus in Matthew 5. Help us, Lord, to respond with love and patience even when we are wronged. Teach us to turn the other cheek, to go the extra mile, and to give generously to those in need. May we follow Christ's example, choosing forgiveness over retaliation and kindness over bitterness. Let your Spirit guide us in living out this radical love that reflects your heart. It's in Jesus' name we believe and pray. Everybody said, Amen. Amen. And happy Tuesday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow down 44 points. The NASDAQ down 38. S&P 500 down 6. And the Russell 2000 down 22. That's our mover and shaker today. Down a little over 1%. In the commodity basket, crude oil down 38 cents, trading 73.99 last. Gold down $2.30. Make that 40 cents. Just got a bump. Trading 25.41.30 last, which now makes it basically unchanged on the session. Silver up 10 cents, trading 29.40 last. In the Asian markets at the close, the Nikkei posted a gain of 674 points, almost 2%. So between today and yesterday, the Nikkei almost doubled what it gained on Friday. The Shanghai fell 27 points. The Hang Seng dropped 58. Now for the Shanghai, 27 points doesn't sound like a lot, but for the Shanghai, it's almost 1%. And in the European markets at the close, FTSE down 83, 1%. The DAX down 64. The CAC down 16. So we had a mixed day in Asia. It was a green day or red day for the UK. And so far it's a red Radio Tuesday here in the US of A. Now, the S&P specifically has been on an 8-day green advance. The day might just be the day. What are they? I think they even have a name for it. It's called Turnaround Tuesday. But we don't want to get ahead of ourselves. We'll wait and see where we're at the close of the session. So, it was the only green on the screen was the Nikkei. Everything else is red. Not blood in the streets red, but red nonetheless. Let's take a look at some news. Former U.S. Representative George Santos pleaded guilty yesterday to 2 charges of wire fraud and aggravated identity theft after being indicted on 23 federal felony counts in 2023. Plea deal will allow Santos to avoid a September trial, but means the 36-year-old will likely face at least 6 years in prison. He owes about $370,000 in restitution and $205,000 in forfeiture. He faces sentencing February 7th. It's currently August 20th. I guess they're pretty busy there. The New York Republican had been at the center of a scandal since beginning his first and only term in office in 2022, when reports revealed he allegedly embellished his background, including his college degree and his Wall Street career. In December 2023, the House voted 311 to 114 to oust Santos from Congress. He became the 6th House member to be expelled in U.S. history and the first to be removed without being convicted of a crime or supporting the Confederacy. Separately, the FBI arrested a Washington, D.C. council member who unsuccessfully ran for mayor in the nation's capital in 2022. California-based chipmaker AMD agreed yesterday to acquire New Jersey-based ZT Systems for $4.9 billion. The cash and stock deal comes as AMD trails California-based NVIDIA as the world's 2nd largest AI chipmaker. AMD says the acquisition will expedite its testing and rollout of graphics processing units, high-performance chips that companies like Microsoft rely on to power generative AI software. ZT Systems designs data center and storage infrastructure systems, counting cloud businesses like Microsoft's Azure among its clientele, and generates annual revenue of roughly $10 billion. Companies like Microsoft are increasingly relying on NVIDIA and AMD as one-stop shop solutions to support infrastructure for power-hungry AI systems. AMD says it plans to sell ZT's server manufacturing business amid the Biden administration's crackdown on mergers. NVIDIA, those regulatory controls cost so much. NVIDIA controls roughly 95% of the world's specialist AI chip market. AMD is believed to control the majority of the remaining 5%. AMD's acquisition is expected to close in the first half of 2025. And as soon as that deal closes, then we'll start hearing about the monopoly. A luxury superyacht carrying 22 passengers sank off the coast of Sicily early yesterday, leaving one person dead and 6 people missing. 15 people were rescued, including a 1-year-old child. British tech entrepreneur Mike Lynch was acquitted in the U.S. In June of fraud, and his daughter Hannah are among those who remain unaccounted for. The 184-foot yacht named Bayesian was caught in severe weather conditions, including what's called a waterspout, which caused it to capsize around 5 a.m. local time. The ship was anchored roughly a half-mile off the port of Porticello when the storm caused the vessel to tip over. Its mast, the world's tallest aluminum mast in the world at 246 feet, then quickly pulled the ship underwater, causing the yacht to sink to about 164 feet deep. According to the U.S. Coast Guard, there were 3,844 recreational boating accidents in the U.S. in 2023, resulting in 564 deaths. The quest for sustainable energy solutions, sometimes the answer's right under our noses, or in this case, over our heads. Sky Quarry has found a way to transform waste asphalt roof shingles into valuable resources like sustainable fuels and more, tackling part of a 15 million ton problem and creating new opportunities. That's only one reason why investing in Sky Quarry ahead of their planned NASDAQ listing can be an exciting opportunity for some. The refinery regenerated $50 million plus in revenue for 2023. Not only did that unlock 211% growth year over year, but it will also help them vertically integrate into the energy industry. Sky Quarry has already reserved the NASDAQ stock ticker SKYQ. And for a limited time, the company is accepting shareholders. Their previous funding round was oversubscribed at $18 million, placing it in the top 1% of crowdfunding. So that might be a company worth looking into. Yeah, let's talk about the Fed. According to Bloomberg, U.S. job growth in the year through March was likely far less robust than initially estimated, which risks fueling concerns that the Federal Reserve is falling further behind the curve to lower interest rates. Goldman Sachs Group and Wells Fargo, their economists expect the government's preliminary benchmark revisions on Wednesday. This is econ reports coming tomorrow to show payrolls growth in the year through March was at least 600,000 weaker than currently expected or estimated at about 50,000 a month. While JP Morgan Chase and Company forecasters see a decline of about 360,000, Goldman Sachs says it could be as large as 1 million. No, nobody ever paints the tape, do they? And perhaps these revisions come as a huge spotlight is shined on those behind the numbers. There's a number of caveats in the preliminary figure, but a downward revision to employment of more than 501,000 would be the largest in 15 years and suggests the labor market has been cooling for longer and perhaps more so than originally thought. Such figures also have the potential of shaping the tone of Fed Chair Jerome Powell's speech this Friday in Jackson Hole, Wyoming. Investors are trying to gain insight as to when and how much the central bank will start lowering interest rates as inflation and the job market cools. Sounds to me like it already cooled. Alphabet's robo-taxis. Have you seen any of these? Have you ridden in one? Google, or Waymo, which is owned by Google, said on Tuesday it had doubled its paid rides to 100,000 per week in just over 3 months as the autonomous ride-hailing firm expanded its areas of service and allowed more people to ride in its robo-taxis. Waymo's expansion comes just a month after Alphabet said it was planning a multi-year $5 billion investment in the company, even as autonomous vehicle technology continues to face widespread skepticism, tight regulatory scrutiny, and some federal investigations. Waymo, which has about 700 vehicles in its fleet, is the only U.S. firm operating uncrewed robo-taxis that collect fares. They're the only player in that space. The company opened its service to everyone in San Francisco in June without joining a wait list, while expanding its operations in Metro Phoenix. I see them all the time. This month, Waymo extended services to the San Francisco Peninsula and to certain parts of Los Angeles. Well, the stock market is finally taking a pause. Stocks struggle to make headway after a rally that drove the market closer to all-time highs, wiping out its early August losses. Equities edged lower today after briefly rising for a 9th consecutive session in what would be the S&P 500's longest winning streak since 2004. Energy and tech shares led losses, while defensive groups outperformed. Stocks have seen bullish flows as investor sentiment improved following upbeat economic data last week, according to Citigroup. They said about $16 billion in new long bets have been added to the S&P 500 futures, driving positioning back to increasingly extended levels. Aside from flows, the recent rally was also fueled by bets the Federal Reserve will signal it's getting closer to cutting rates. And Trump is about to get, a month out from being able to turn his paper social media fortune into cold hard cash. Question is, will he? The former president will be able to start selling bits and pieces of his $2.6 billion ownership in Trump Media and Technology Group Corp. whose share price has fluctuated wildly since going public through a special purpose acquisition merger in March. They're called SPACs, Special Purpose Acquisition Company. Trump has not indicated any intention to sell shares in Trump Media, which operates a social media platform, Truth Social, and doing so could give the impression that Trump is prioritizing personal profits, a criticism pundits often level at him, and alienate loyal followers who poured money into the company's stock as his presidential campaign surged earlier this year. However, the Republican nominee is also facing massive legal bills that a sale could help cover. My guess is he'll wait till after the election. But you never know, do you? All right. Logic 247. Let's take a look and see where we are. We're in week 316. Over the last 316 weeks, we've issued 17,644 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Yesterday was probably the worst Monday ever. Sunday night we had issued a total of 6 alerts, and we had 2 stop out, so that put us at 67%. What a difference a day makes, right? As of 6:30 a.m. Eastern this morning, when Valerie did this recap, which of course she'll update later this afternoon, the number of alerts issued so far this week since the markets opened Sunday night sits at 22. 1 never triggered, still waiting on 3. 18 actionable alerts, of which 3, or 17%, again, would have been stopped out based on market structure and that very simple process that we teach all of our passport holders. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. Our day session is their night session, and vice versa. Now, the logic alerts have an entry price, an initial target designed to help you get your goal for the day, and then quite often additional targets, and then a final trade to target. The purpose of the logic alerts is not so you can just trade those and not have to worry about learning how to trade. If you use them that way, that's a horrible mistake. Use them as the learning tool that they're designed to be, to help you learn how to read a chart. If you're new to trading, when you look at a chart, it kind of looks like chaos, but it doesn't have to. When a logic alert comes out of a market that you trade, go to the 30-minute chart. Draw a horizontal line at the entry price, whether it's long or short, and then a horizontal line at the initial target, and then horizontal lines at any additional targets. If it's a long alert, the final trade to target will always be the weekly zone above. If it's a short alert, final trade to target will always be the weekly zone below. If you repeat that process enough times, the chart will start to make sense to you. You'll be able to read it like a newspaper or a good mystery novel. You'll know where to anticipate resistance and support, and you'll be able to identify the windows of opportunity where it's safe to put on a trade. Now, The logic alerts, as I said, can come out anytime around the clock, but the CTAs are published as a static report shortly after the Globex open each evening. Last night it was 6:45. The first thing you want to do when this report comes out is go to whatever markets you actually trade. Go to the 30-minute chart. Make a note where price is at this time. It'll always be between these two numbers. Okay. Then draw a line in the sand at the long target, line in the sand at the short target. This will help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, then it's attempting to reach the short target. The part's pretty simple. The BBC is just the green line you see on my charts. Now, the markets are fractal in nature, so while I use a 30-minute chart for the purpose of the logic and the concierge trade alerts, there's nothing magical about 30 minutes. You can apply the BBC to daily chart, a weekly chart, a monthly chart, 5-minute chart, a tick chart, a range chart. It functions the same. Price gets above the green line relative to whatever time frame you're looking at, expect higher prices. If price gets below the green line relative to whatever time frame you're looking at, expect lower prices. Here's the part where you get to look left now to see if in fact you've learned how to read the chart. If you've learned how to spot potential obstacles, be they support or resistance. And you should be learning at this point how price behaves at a weekly trading zone. It's important because price is always trying to reach a weekly trading zone. From the time the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to get to the weekly zone above. Price is below the 30-minute BBC, it's trying to get to the weekly zone below. Publish the zones for our members every week since December 14th of 2009. This December will make 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. You just got to resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's take a look at the daily chart of the S&P. Now you might say, I don't trade the S&P. That's okay. What I'm going to tell you is true for any futures market, any individual stock, any crypto, any Forex, or any ETF. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size and the incredible size that the institutional traders trade in. Their trades literally move price. You and I serve as liquidity. Okay? So if you'll make it a part of your daily plan, no matter what you trade, spend 2 minutes with the daily chart. And number one, you'll be looking over the shoulder of what the deep pockets are doing. Our strategy and indicators aren't designed to outsmart the institutions with their infinite resources, but to help us see at any given time what they're doing so that we can do the same thing long enough to get our goal for the day. Now, as you can see, this little wick here shows that we were beginning our 9th consecutive session of green candles, but we've pulled back to support at the 38% fib extension. So looking at the daily chart, not only allows you to look over the shoulder of the institutional traders who move price, but it allows you to identify important areas of support and resistance. And that's how price flows. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. If price trades below the low of the day and below this 38% fib extension, our next area for support would be the daily step line and the 24% fib extension. Just below that, we have the 24% fib retracement. Now, we've made a trip all the way down below the 62 in the last few weeks. And now, look at where we are. This is one of the fastest rises in price that I've seen since I started trading futures. I mean, that really is a substantial move. Price, now this was not a surprise because price drops faster than it rises. It takes financial commitment for price to rise. So the question becomes then, where's this money coming from? Because a whole lot of money was lost on this trip down. Look how long it took price to go from here to here. We're talking back, what, in April to July? But this run here has happened from August 8th to August 20th. I would challenge you to go find a daily chart that looks like this. There's something going on out there. I don't know what it is. I just know I have to trade what's in front of me on any given day. And the daily chart helps me to identify where I'm most likely to find resistance. Overhead right now would be the 50% fib extension. Of course, again, support is at the 38. And then we've got the step line, which is at the 24% fib extension right here. And then below that, we've got the 24% fib retracement based off the low of April 19th and the high of July 16th. That's the all-time historic high. So we've got a leg, a retracement, and a leg. Or do we have a leg, a retracement, and a potential leg? Going into this presidential election, we anticipate a lot of volatility, and I think historically prices tend to rally into an election. This is not your father's election. There's a whole lot of things going on that have never happened before. A presidential candidate who never received even one primary vote, who never made it to Iowa, is now the contender for the most powerful office in the world. Sort of mind-blowing. Okay, the vertical line, as I said, all alerts are created on the 30-minute chart. Okay, so this is the 30-minute chart of the ES. The vertical line separates today, Tuesday, from Monday. We opened last night right here, traveled sideways, and that put us in a position where we had resistance overhead and, of course, support below at the BBC. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. It stands for bull, bear, cross. Bullish above the green line, bearish below the green line. Right here, off the London Open, popped up, and we hit the long target at 56.40. So that resistance sent us back to the BBC, which held as support. But blue and climbing had gotten directly above price, and so that acted as resistance, sending us back to the BBC. Now up to red and falling, back to the BBC. Not a lot of movement here, but again, that's how price moves, from support, resistance to support, resistance. Here we got a little bit below the BBC. We even had a candle open and close below the BBC. But at the 9:30 open, which is often the largest candle of the session, we shot right back up to that long target. In fact, we overshot it and put in a high at 56.43.75. But the following candle, the 10 o'clock candle, outsized, although it ended up closing right where the 9:30 candle opened, but we did spike it. In fact, we spiked all the way down to the weekly trading zone. When price drops to a weekly zone, we expect support till proven otherwise. When price rallies up to a weekly trading zone, we expect resistance till proven otherwise. Only three things happen at a weekly zone. 70% of the time is consolidation, like this, like this. 20% of the time is a rejection, like that. 10% of the time is the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that slice runs out of steam, what will typically happen is price will retrace to the zone it sliced through and continue in the direction of the slice. Now, right here, this is the highest weekly trading zone for this week. And currently we have the market turning down. It has tried to get through support at the weekly trading zone 56.14/56.15 1, 2, 3 times. And it looks like we may be headed for another trip down. Now, the step line is starting to hook to the right. If the step line crosses red and falling, then we'll most likely get a retracement back to the BBC. Now, this first retracement to the BBC held. Will the next one hold? Or will we take out support? Watch this candle. There's really no room to put in a trade here. Your zone's at 56.14/15. So you would want to enter at 17, but the problem is you've got potential support right here at 56.16/75. In order for the short CTA target to come into play, then we have to clearly trade below this weekly zone, which we haven't done yet. On the Dow, market open, ran right up to the zone, again, which we expect to be resistance, as it was yesterday. Now remember, the Tuesday session that we're in today started last night at 6 p.m. Eastern. So we hit the zone resistance. We got a retracement. This low lining right up here with this closing low from yesterday. That support sent us back to the zone, eventually sending us back almost to the BBC. And then we break through the zone at 41.025/30. And we come just shy of the long target. 5 points, 5 ticks. The Dow really doesn't have ticks, it just has points. Why? That's just the way they created it. So in this candle, we spiked the BBC, but the zone held, and then we finally closed below the BBC. And then price retraced right back up to that zone. What was support became resistance. That's pretty common. Then we got a leg. Took us all the way down to this low from yesterday. We ran up and hit the zone. Now this is the 930 candle, and this is a perfect example of why I don't trade the 930 candle. The volatility is often unmanageable. Okay. I mean, you're up, you're down. I prefer to let the market assume its normal rhythm. So the support here at 4095/910, we dropped as low as 915. That support sent us back up to the BBC. The pullback held again, and that sent us back down to the target where we overshot it just a little bit. See where you've got the close of this candle and the open of this candle? You put your cursor right in there. Find that support right there. So that has now sent us all the way back up to the BBC. And so far it's holding. The step line and red and falling are now directly below price. So they're actually acting as support. So price needs to get below both of those and this low. So that's 1, 2, 3 areas of support on the way back to this zone. Then we have to take out these lows before we can trade something like 48.55 down to 48.35. And if we get through that target, then we've got this area here around 4800, then potential support at 47.75, and then that would put us at the zone below 755/760. So we were up and we were down. All right, when I come back, we'll pick up with the Russell. Michael's going to give us a recap of what happened in the live training room this morning. We got a trade opportunity coming up here on the Russell on the short side, so keep an eye on that.
Okay.
After the recap of the live training room, we'll go live on TradingView for 30 minutes. Then I'll come back, finish the recap of the alerts, and close out the broadcast with our good word for the day.
All right.
Okay, looks good.
Excellent. Here we go. And I just want to take a look at what's going on over here. All right, here we go. Good afternoon, everyone. It is Tuesday, the 20th day of August, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here, it says 7 free 5-day training now, 9:15 to 11:30. Click on that. Now, there is no credit card required for the trial. Just click on that, and it's going to lead to this registration page, where all that we ask for is your first name, last name, email, and phone number. There are 5 multiple choice questions. They are mandatory to fill out, but they're multiple choice. Just fill them out honestly, please. And if you have Ninja Trader, use a Ninja Machine ID. If you have TradingView, give us a TradingView login ID. All right, hit the register button. When you do that, we'll be notified that you did all that, and we'll be able to set up the indicators so they can start indicating on your charts at the beginning of your trial. And that's really what you want to be. You want to have your indicators indicating when you start the trial, even before possible. All right, so the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 20th day of August, 2024. We made 57 ticks on the NQ. We lost 15 on the Russell. We made 20 on the YM, and we're break even on the ES. Put us at plus 310 on the one session. Today it took 2 minutes and one trade to get to the goal for the day. At that point, we're up $2,000, and we took a total of 14 trades this morning. So we've got a lot of one traders going on in here. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 out of 14 days. We got the goal for the day on the first trade. Something to be said for that, I think. Anyway, on the month, we're now at $8,115, averaging $579 per contract per morning session. And on the year, we're at $66,067, averaging $426 per contract per morning session. That's on the whole year. So this is just on the month of August, and this is on the whole year, 426. Now, see that one, we ended up less. It's just the yearly average. I'm trying to see if we had a monthly. Here we go. This month right here, June, we ended up less than the yearly average. Yeah, we had less than the yearly average. We brought the yearly average up quite a bit since then. Yeah, and in May, it was less than the yearly average. There we go. April, we're greater than the yearly average. March, we're just about the yearly average. Oops, I don't know what I just did. But anyway, let's just get into the actual trades, right? There weren't that many, but we'll get into them anyway. We are on, once again, run a larger time frame. I don't know what the heck I just did. Let's undo that. We are on a larger time frame still with Russell, the YM, and the NQ. Okay, and we're probably going to stay on the larger time frame with those. Going back here to the beginning of the day, you see how easy it is to get back to the beginning of the day now. Here it is right here. Now, is this the beginning of today? No, that's the beginning of yesterday. You see how easy it is? We go all the way back to the beginning of yesterday. Right, this is the beginning of today. Right, on the YM, this is where we got our goal for the day in the very first trade. We got our goal for the day, plus 20 ticks. We could let it run and got some more out of it, but that's all we're looking to get was that plus 20 right there. We ended up with a break even on the second trade we took, and that was it on the YM. There was not a ton of opportunity on the YM. Now, when I get into the next part of this, I'm going to show you guys something that you should be starting to focus on as we keep moving toward the end of the 2420 blueprint. Right, so this is the Russell. This is the whole day in the Russell on a 19 range. We started out with a break even, then we had to stop out, which is minus 25, and then we picked up 10 ticks right there, get us to minus 15. That was it on the Russell today. Okay. We did have a couple of trades on the ES, and again, you can see the whole day in one screenshot. Here they were. This wasn't. Was this today? Hey, I have a blue in there. I didn't get anything on the ES. I ended up with a break even on that trade. That shouldn't be blue. That should be I don't think it should be blue. I'm gonna go look. Let's go and look at the ES and see what I ended up with. Actually, on the ES, I have 272 ticks. So, if you divide that by 20, 272 divided by 20. So I actually made 13.6 ticks. Did I do that on that trade? Doesn't. I don't know. What did I do yesterday on the ES? It's a carryover from yesterday. I think I just threw out yesterday's list. Let's go here for a second. Cancel. Go here for a second. And see what I did on the ES yesterday. It's May, June. Here we are. On the ES yesterday, I had 8 ticks yesterday. So I have 5 ticks today. Okay, so I guess that's even better. 5 ticks today. That's not what I said. Overall, how many ticks was that? I had 200. And here, I'll just show you. Here, I have 272 ticks. Now, obviously, there's some slippage in that. And if I had 8 yesterday, that's 8 ticks times 20 equals 160 minus 272 equals 112 divided by 20. It was 5.6. So there's some slippage in there. I probably would just call it 5 ticks. But that's, I guess I wasn't paying close attention at the time. I've been distracted. But anyway, that was those were our 2 trades. I guess I got 5 ticks on that one, and 5 ticks actually on the one, and I got a break even on this one. And that was our morning. On the yes, let's see. During the break, there was really nothing you could do here during the break. There was no trades on for most of the morning during the break. And what I'm going to show you is going to just kind of push that whole idea of the no trade zone in a few minutes here. We're getting some good movement right now, though. All the markets are starting to move. So let me finish up with this recap, and then we can start trading. Okay, on the NQ, we had just a few trades on the NQ today. The liquidity is starting to come back into the NQ a little bit, so I'm trading it a little more often right now. But I am still trading on a larger time frame. All right, so our first trade on the NQ is right here. We got 4 ticks on that. The next one's right there. We got 4 more ticks to put us at 8. And this one's right here. We got 16 ticks to us to 4. Then this one right here, we got 48 ticks to get us to 72. And then I stopped out right there, minus 36 ticks. And I stopped out pretty much to the tick on that. See, how did I end up stopping out on that? Right? I think I took the black arrow, not the green arrow. Right there, I took the black arrow, and it stopped me out by 3 ticks. If I didn't get the slippage that I got, I would have stayed in that trade. But I ended up stopping out. That brought us back down to 37. And then there was one more trade that I took somewhere in here. No, I don't see it, but there was one more trade that I took when we picked up 20 ticks. I guess to 57. It was at the end of the session that I took. I gave this blue arrow. I picked up 20 more ticks, get us to 57. And that is where we ended it with the end. During the break, there were some blue arrows and black arrows and stuff like that. This would have stopped me out to the tick again. I probably would have gotten slipped in. It was like almost identical to the one that stopped me out to the tick. That black arrow that I took back here. See that? Similar thing, except it wasn't black and the green. It was a blue and a green this time. On the NQ right now, this arrow right here is not, and it's appealing to me because it's got a long way to go to get down to the swing low. On a larger time frame like this, the black arrow is much more appealing to me. Okay, if they have a long way to go, if they do a decent tracement, and they have a long way to go to get to the swing low, then you're gonna see me taking a lot more black arrows. Like I just took that black arrow right there. I'm throwing my stop at break even. I'm actually gonna throw it at plus 4 ticks right now. Now I have a target at plus 48 ticks. This is where it should get down to right here, 748.50. Now my target was down there, but it wasn't. It was lower than that, I think. But we just picked up a little bit on that. Okay. Yeah, the NQ. Sorry, back to this. On the NQ, we ended up with plus 57 ticks is what we ended up with on the NQ this morning. Okay. And let's see. If you're in here right now, you're just looking on the YouTube. Let me get out there and open the YouTube. I didn't have it open when I should have yesterday. Let me go out there into YouTube. All right, here I got it opened up now. All right, so I don't see any questions out there. Now, if you're taking a free trial with us and you want to, go here to mytradingIQ.com, click on the purple button. There's no credit card required for the trial. It's going to be to the registration page. On the registration page, just fill it out. All right. It takes 30 seconds, maybe less. First name, last name, email, phone number, 5 multiple choice questions. If you have an NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. You really want to do that if you have them. All right. Now, the NinjaTrader is not that big of a deal if you have TradingView. TradingView is the one that we chart on. All right. We have the stuff on NinjaTrader, but we haven't updated in a couple of years because most of the stuff is on TradingView right now. All right. So give us that information, and yeah, and then we'll be able to get your indicators indicating for you. I don't know why we don't have color showing over here on this. Did I shut that off somehow? I was using it today and I might have shut it off. Yeah, I did. Here it is. I did shut it off. All right, so here we are. Now, the thing that I wanted to show to you guys, moving forward, this indicator down here is going to become more important as we move forward, right? Because what I want us to eventually get to is right here. Let me put on what I want us to get to. I'm missing our bands on this too. Let me put those back on. And the overbought number sold arrow, and the momentum arrow, that arrow, and that arrow, and that arrow. Okay, so now let's get everything back on it. If I add a new one on here, just go here and we'll put a new one on. And we'll just go in here and now we'll take off everything. I just added back on there. Okay, and this is where I want to be, like this. All right. Just have to have an open ribbon, and commodity overbought. Okay. All the stuff that you normally do, the weekly trading zones, everything else that we normally do, still works normal. Swing highs, swing lows, all that stuff, still good stuff. Using that to establish targets, using that to figure out when you're in a trend, when you're not in a trend, all that information is still valid. Just want to do it with few indicators on a larger time frame. And if larger time frame, if the stop on the larger time frame, because the stop on this is 36 ticks, right? It's 31 range, stop is 36 ticks. If the 36 tick stop is too much for you, you can go to the micros and trade, half as many contracts, and it'll cut that stop right in half for you. All right, sorry, not half as many, but trade 5 contracts, and it'll cut that stop right in half for you. All right, you get that stop where it's a manageable number, and then the risk reward numbers are still good. Be trade over times, you'll be having bigger trades, and it'll be easier for you to get into the trades. That's where we want to be going forward. All right, so let's just look at this right now. See right here, the ribbon's getting crunched up, so you're not going to have a trade there. This ribbon's starting to crunch up, you're not going to have a trade there. This ribbon's not crunched up. So if you get a down close on this bar and it pulls this out of the overbought, you'd have a trade there. This ribbon's not crunched up, it's starting to expand. So if you get a down close on this, well, it's not pulling out of the overbought, so you're not really going to have a trade there. But where I have that set to 85, yeah, I can drop that. I can drop that down to 80, and it'd still be effective. But that's where I want to be, okay, in the future, in the near future. Now, if we go out here and we look at this, was it 7 out? Yeah, it was a Z, but I was looking at on a much smaller time frame. Much smaller time frame. In here, this is the ZV with just the regular TV trades indications on it. And if you put the beta on it, you might be able to see all the other stuff in there too. I'll take those off. And you know what? I don't have everything on here on this one, on this version. I do need updated to send. So we'll leave that there. All right. See the same information though. We don't have the ribbon on here though. We don't have a ribbon there. But the Bitcoin, what was Bitcoin doing today? Right here, I made a nice run this morning and it's selling off right now, it looks like. And the Mara, no, it filled the gap. It filled that gap finally. That gap from the 9th. It just filled today. So it filled the gap, and as soon as it filled it, it completely sold off. Man, that is something right there, isn't it? That 30-minute candle filled the gap and then bam, right back down here. So, I mean, it's finding support here. That's a good thing. And there's a lot of sellers up here. That's a bad thing. Once it breaks through that, though, it should be really bullish. I would think if it breaks through the top of this right here, it should be really bullish. And that is the Mara update. Let's go back in here and see if we have any trades developing. Okay, so this is oversold. I mean, this is overbought. This is now overbought too. But the ribbons are starting to crunch up. You see how this blue in the ribbon there and blue in the ribbon there? That means the ribbons have begun to compress. Okay. All right, so on the Russell right now, we want to see a down close. Now, down close right here is going to give us a green arrow. I believe if we get a down close on the Russell right here, it'll give us a green arrow. And that would be an okay trade to take, I think. It's got a high here of 49.8, so you'd be selling 47.8. And this is what it looks like. Okay. Man. And I apparently left an order on over there on the NQ for that last trade that I took. And I'm long from way down here. So I'm going to lock in some profit on that right now. And that won't count toward anything. That was a mistake. It was when I took that black arrow over here. I had profit on that black arrow. I had left my order on my stop order, which was up here somewhere. And it just triggered in over here. I didn't really realize it. I thought I heard it go off in my headset, but I wasn't looking at it. All right, so we have this order waiting to fill over here on the Russell right now. Let's bring that back up. It is still waiting to fill, and it's still 0.7. Do that. Just make sure that the top of that bar is where I think it is. Hang on, I can do it right here, can't I? Yeah, the top of that bar is at 0.7. You see it right up here. Top of that bar is at 9.7. So I'm selling 7.7. It's 20 ticks below. 20 ticks below the top of the bar. Okay. All right. Does anybody have any questions about anything? Let me go and look at the YouTube channel and see if anybody's had questions out there. Nope. Nobody's got any questions out there either. All right. Well, I know people are watching out there right now. I see that much. But this is turning into nothing right now. It's not very high. It's still 9.7. Seems like it's losing all its momentum here. You know, when we're on the larger time frames, it's going to be a lot of quiet time like this. That is the idea. So you have a lot more time to put the trade on. Think about the trade. Understand what the trade should do. You know, if you do the diamond principle on this right here, if we get filled right here, and it takes just as long to get to the swing low as it took to get to the swing high, the diamond principle should put you where? Yeah, we just filled. The diamond principle should put you where? It takes 1, 2, 3, 4 bars to get to the swing low. That's 1, 2, 3, 4. 4 bars there. Then we'll have to go out 9 bars. 1, 2, 3, 4, 6, 7, 8, 9, right there. 1326. 1326. Where should it be in 1326? Right about there, right? Why should it be there? Because this is how far it went. So I guess it's a little lower. Right down at the weekly trading zone is what it looks like. Goes right down to the zone at 1326. Using the diamond principle, that's what we should see. And that would be right at the end of the session. So that'd work out okay. These other ones don't really have anything. Now the key to this is going to be put a lower swing in the same time frame it took for this. Okay, putting the lower swing, same time frame it took for this to happen right here. Okay. Now with a 19 range, it has to go 10 ticks into profit. We had to bump the stop to break even. So it's going to get down here to 6.6, and then stop goes to break even. Okay. And now I can use the break even button again, because having the extra time, the extra space, and the extra time is usually okay with the break even button. Where before I had to have the strategy, so I didn't have that dialog box pop up. Now the dialog box still pops up, but I could make a strategy that will never execute, that I can still put on and manage. That's a thought. Because now that we're moving the stop all the way to here, I could have the thing move the stop automatically for me. I could have it do the whole thing. I'm going to try that. I'll do that right in a minute here. I'm just going to create a strategy right now. Configure. New. I'm waiting for that to get down to 6.6. Profit target. What is my profit target? Oops. I've got one of these other ones. I can't read any of them. It didn't get down to 6.6, so I could remove my stop to break even. Profit target, I'll just put 36. That's about right. Stop, initial stop is 25. This is a trailing stop. And once we move it, fear factor, it's going to go 10 ticks and trail it 25. Okay. See, okay. Okay. So I'll try that strategy on the next trade setup we have. That is on the 19 range. Okay. So for right now, we're waiting for it to get 10 ticks into profit, and we'll bump the stop to break even. All right. It's funny. I'm watching a little bit of delay over there on YouTube, and it's showing us still in profit right now on YouTube. Should get back there. We shouldn't have an issue with this. You see, the profit target lines that are printed right here, they're from the last blue arrow, this blue arrow back here. So we hit the first one, we hit the second one, and the third profit target line is way down here at 137.5. 137.5. That's way down here. So that'd be well beyond my.
You should be able to move the slider on YouTube up to where you're currently at.
Oh,
it works on a VCR principle.
Hey, look at that, Dwayne. I did not know that. This time I thought it was really delayed. Okay, now I know. I wonder if it's always just been that little thing. It took me like years to realize on DT Pro, one simple thing on DT Pro that I hadn't done right for 10 years, I'd done it wrong. Valerie actually showed me. Anyway, we're still waiting for this to get down to right here. All right, nothing else is setting up a trade right here. The markets are really, really slow. So it is what it is. We're going to trade what's in front of us. There was something else I was just going to go take a look at. I forgot what it was. So, the time element, the fact that this is out here at 1327, that's not really based on time. That's based on the number of bars that it took. And now the whole assumption here is that it's going to take the same number of bars to get down to the prior swing low and exceed the prior swing low. So the assumption is that that's what's going to happen here. Now, we don't have anything today, as far as I know. It's almost down there, 6.6. We don't have anything today, as far as I know, this afternoon for news. Right? We have 11:30. We have the 42-day bill auction. No big deal. 1:35. That should be coming up in just a few minutes. This guy's going to be speaking. And then 2:45, 1:35, he's going to speak. An hour later, this guy's going to speak. And then we have the food stocks. Almost there, guys. Almost there. Okay, so the ATM stuff that there it is. So the ATM stuff that you are also used to seeing used with the other trading platform. Oops. We can now use that in here because it's not just a 4-tick range. Right, so now I'm going to lock in 10 ticks on this, and the swing low is right here. This is the swing low. Right, but we're going to lock in the first 10 right there. Maybe lock in the second 10 there. Right, we'll just take 20. 20 is good. I don't know how much time we've got left. We only have 9 minutes left, so I'll just take the 20 ticks right here. And I'll always be happy taking 20 ticks with 20 contracts on. We still expect it to get down here, though, exceed that prior swing low. And if this bar closes down, it's got a high here of 46.4, so the low will be 44.4. If this bar closes down, it's going to put in a new swing low. All right, so it'll have happened faster. So this should actually happen faster. Right, so I was figuring that was going to happen by 13:33, by 1:33, based on the time, the number of bars that it took to make this happen. Now it's not. There's no guarantee that it's going to happen ever, but for it to even be meaningful, this has to put in a lower swing. This has to get down below this level for it to be even meaningful. Okay, if that doesn't get down there, then it's not terribly meaningful at all. All right. Still waiting. We have a blue arrow over here, but you could take that blue arrow if you wanted to. The outer bands are just barely spread. You could take that over there if you wanted to. I don't really want to. The markets are just really weak and sideways right now. I'm happy that the Russell got us 20 ticks. And if we have to wait it out, then we're going to have to wait it out. But slower, fewer trades. Not racing around like crazy people. Like I've been doing for years. If we put this on the 7 range, what do we have in here? Ignoring the no trade zones, we still didn't get a trade in there on the way down. We would have had a trade right here. We would have had a green arrow right there, a blue arrow right here. Here would have been a blue arrow. A green arrow right here, a no arrow there, and a blue arrow there. So in the last hour, those would have been the opportunities. Every one of them would have been okay. I'll just change its sensitivity so you can see all those arrows print. Hang on, let me load up to change it. Oh, I changed it on the wrong one. There we go. There you go. Your blue arrows, your green, all the arrows. They all worked out really well in that period on the smaller time frame. And you get another one about to trigger right here on the smaller time frame. But when you jump in here to the larger time frame, you have fewer, more meaningful trades. Okay. So you guys understand why the diamond principle put this back here, right? It was figuring it's going to take 1, 2, 3, 4 bars. 1, 2, 3, 4 bars. It was figuring over to here to get through the swing low. Let's get one bar than that right there to get through the swing low. And so that's I think it's going to go over one more bar. Like that. Okay, and then clone it. Take the other one, stick it on the end of it, and there you have it. That's how it should get there. Might be over one bar, but give or take one time period. Remember those words, man? Give or take one time period. Is it 1 or 2 time periods? Something like that. The square.
Yep.
All right. So now we still waiting for something to set up. We don't have anything. I didn't want to take this blue one because it doesn't really have any trend. The outer bands were pretty flat. I was looking flat when it was like that. It doesn't really have any strong trend right here. So I didn't take that. And still waiting for this to put in the lower swing so we can actually figure out the time for the next part of it. Now the high of this ended up being here at 7.1. So I think the high is 7.0. So the low is going to be now at 45. So it'd be the next bar, right? Maybe not even the next bar. It could be the bar after that. None of this right here in the diamond principle means anything unless we put in a lower swing. Okay. Now I want to draw one more line here just so you can kind of see how this works. It's that line right there. Let's see. There you have it. That's what it should be. So a squared plus b squared equals c squared. Let's put that green there. Sorry. You just gotta wait. We don't have a trade. We have nothing coming up over here on the NQ either. Nothing here in the ES, nothing here in the YM. And we had the one trade with 20 ticks profit there on the Russell. Let's go look out here one more time. I don't think Bitcoin is going to make any big changes here today. So, all right. If you have not taken a free trial, let me get into this one last time. If you have not taken a free trial with this, go here to mytradingiq.com. Click on this to sign up for your free trial. All right, there's no credit card required for the trial. When you do that, you will be brought to this registration page right here. All we ask for is your first name, your last name, your email, your phone number. Fill out the multiple choice. If you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. That's all you need to do. You do that, hit the register button. We'll enable the indicators so you can have them indicating. You'll be sent an email. Now the email is going to have this link in it. Right, and it'll have another one for just 2 charts. If you have TradingView, just click on that. It's going to make a read-only copy of the chart. The upper right-hand corner will be the word copy. Just click on that word copy. And make a copy of this with all the current drawings that I have on this. And if I save this right now for you, it'll have all the current drawings that I have on it. Now, there was one thing that I wanted to look at that Shut that one off. Okay, see how the ribbon is starting to spread out and you're oversold. It's tempting. See how the ribbon was not spread out in here? You don't want to take any trade when it's not spread out. But when it is spread out, you come out of the overbought. When it is spread out, you come out of the overbought. That's all you need. That's it, guys. With that, I'm going to have to pass it back out to Fabulous Drinks Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep. Okay, recap of the morning session.
Today it took 2 minutes and 1 trade to get to $2,000.
Good job.
Thank you. Thank you very much.
All right, guys, we'll pick up where we left off with the Russell. This is where we opened last night. Remember, the vertical line separates today, Tuesday, from Monday, and Tuesday began last night at 6 p.m. Eastern. And it does every night, Sunday through Thursday. So we spent quite a few hours consolidating right along the weekly trading zone. Remember, that's what happens 70% of the time when price encounters a weekly zone. 20% of the time is rejection, 10% of the time is the slice, as I showed you earlier. So we run up and hit the long target, came back to the zone, resistance sends us back to support, and we just consolidate for hours. And then this morning about 9 o'clock, we take a drop below the BBC. We got red and falling. We got that perfect stack. Price, step line, red and falling, BBC. And this candle, which opened at 21.73.30. It's all the way down to the zone at 64/65. Remember, when price drops to a zone, we expect support until proven otherwise. So we caught a little bounce, ran into the step line here, resistance, we still got that stack, and down we go through the zone, through the short target, and then when we hit the next zone, we find consolidation right where we did yesterday at the weekly zone. Step line has crossed red and falling. So now what we expect is for price to retrace back to the BBC. First, it has to overcome the weekly trading zone, which could serve as resistance. And if we go into an extended consolidation phase like we had here or here, then what will happen is price will hang up here and the BBC will drop to meet price, which is a very different dynamic than price rising to the BBC. So keep that in mind. If price should take out this low here, then as we look left, we got potential support here at 21.40. What's this low? 21.40.70. So you don't really have room for a trade in there, unfortunately. See, 43 to 41. Yeah, that's a trade. 43 to 41. And then down to the zone at 38.39. In Q, here's where we opened last night. Price ran up and when climbing had gotten directly above price, turned to red and falling, resistance, popped above it, made an attempt at the long target, but no bueno. So price got scrunched up here, support below, resistance overhead, then we dropped below. And we attempted to make it down to the target, but we didn't quite get there. By Buyers came in, caught this move here off the 930 open, and we got that exact same reversal like we had on the ES, I believe it was, or the Dow. This wick managed to come down and touch the zone. Spiked the zone, we consolidated, support sent us to resistance, resistance sent us back to support, and now we're once again consolidating at the zone. Notice the step line has crossed red and falling, so anticipate bounce up to BBC, which we expect to be resistance until proven otherwise. Crude. We have rolled to the October contract, V. Here's the open. Consolidated along the zone, and then we drop right to the short target. Support sent us up to resistance. Resistance sent us back down through the zone. We spiked red and falling. Buyers came in at 72.54. Pushed us all the way back up, turning red and falling into blue and climbing. Get above the zone. This candle opens at 73.53 and takes us all the way up to the zone at 73.75. Then we do some wide-ranging consolidation. Retrace one more time back to the BBC, the pullback holds, and on that pullback we actually touch the short target again. And then it's off and running as we attempt to reach the zone overhead at 45.50, but we missed it, didn't quite get there. Just wasn't enough buying interest. So that sent the market lower. Back down through the zone, through the BBC, back to the short target, and we've just been consolidating sideways for hours. Gold just opened and kind of went sideways. And the market woke up with the London open. See it perk up here. Got price, step line, blue and climbing, BBC. We ran through the long target, taking out the high of yesterday, Monday. That pushed us all the way up to the zone overhead. Consolidated for hours. Blue and climbing got directly above price, and when that happens, it often becomes resistance as it's on its way to becoming red and falling. So that pushes price back down to the long target from the opposite direction. And then we've got a bullish cross right here, which we spiked down to this low right here. Support will always send the market looking for resistance, which it's trying to. It may have found it red and falling. It may make it up to the BBC, but from there the potential is for another leg to the downside to here. And remember, over here we didn't quite make it to the short target. Just caught up in this sideways congestion. Silver. Here's where we open. We dropped to the zone. We spiked it. We consolidated at the zone. There we have price, step line, blue and climbing, BBC. Off we go. Up to the zone overhead. Price gets rejected. Make another run at it. This time we overcome it. And we put in a high on the session for silver at 30.03. And then we came flying back down through the BBC. A leg, retracement, a leg, a retracement, and a leg. We found support at the zone. Now the step line is trying to cross red and falling. And as you can see, price is attempting to retrace to the BBC, which is what we expect. Pullback holds more often than not, like it did here, 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 here. So if we get a hold here, then we'll trade it back down to the zone below. Keeping in mind that on the way down, you got to overcome red and falling, you got to overcome the step line. If the step line crosses, then you'll have to overcome the step line first, then red and falling. And each one of these lows is potential support. And that puts you back at the zone. Last, the euro. Here's where we opened. We came down to the VBC, consolidated for hours, took off, hit the target, overhead. Resistance sends us looking for support, which we found at blue and climbing. It sent price through the target. Then we got a retracement. Back to blue and climbing again. And then we put in a slightly higher high. Okay? Slightly higher. And the step line has already crossed blue and climbing. So we would anticipate a retracement back to BBC. Now, if this curls over and becomes red and falling as we come back to the BBC, and this pullback may not hold, we may find price by the close of the session down around this area here. It seems like, it definitely had a bullish tone to it that seems to be weakening. But we'll see. See, blue and climbing is right above price, so that's potential resistance. If it pokes through it, in this area right here, that's potential resistance. One last look at our daily chart. Still got a red candle on the day. We've poked below that 38% fib extension. Next area for support on the way down is going to be the step line. 24% fib extension. And right below that, the 24% fib retracement. And then you've got the lowest fib extension, which lines right up with the daily BBC in blue and climbing. So that's actually support times 3. So the potential for price to come here and catch a bounce is probably pretty good. To become a member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI. Send an email to support@cfrn.net. As a passport holder, you'll get 2 hours of live training in an interactive environment every trading day. You'll also have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs. Doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts around the clock. Concierge Trade Alert report every evening when it's published. You get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop every Thursday night. Not to mention around the clock support. Everything a trader needs, all under one roof at one low price. mytradingiq.com. Let's wrap it up with a good word for today. Changing your expectations. Now, when it comes to trading, it's important to have realistic expectations. So many potential traders, talented traders, end up failing because they have unrealistic expectations. Now, when you're brand new, it's easy for your expectations to be unrealistic because, well, you're brand new and all you've heard is the stuff you've read on all these different websites and on all these emails and how you can make $4,572.38 in your boxer shorts at the breakfast table. Okay? We all know that's nonsense. If you don't know that's nonsense, well, then you got a little bit of time and a little bit more treasure to lose before that reality sinks in. So there comes a time in our life and in our trading when we have to change our expectations. John 15:11. These things I have spoken unto you, that my joy might remain in you. Why did Jesus say, these things I have spoken unto you, that my joy might remain in you, and that your joy might be full? Well, because if you let it, stress will drain you of joy and consign you to a life of depression, dullness, and discontent. Let's face it, most of us are way too serious. We make a big deal out of everything. Being 5 minutes late, getting stuck in traffic, somebody giving us a wrong look, waiting in line, overcooking a meal, gaining a pound, discovering a wrinkle, making an honest mistake, you name it. We all lose perspective. The real problem is we have unrealistic expectations. That's not how God wants us to live. If you want to experience the joy promised, do these two things. Number one, concede that your uptightness is mostly because of the way you have decided life should be. Two, acknowledge that your expectations are causing you much of your frustration. When you keep expecting things to always be a certain way, and they're not, then you'll always be upset. Here's an idea. Try approaching life today without all those expectations. For example, don't expect everybody to be friendly. Then when some are, you'll be delighted. Don't expect your day to be hassle-free. When trouble comes, look up and say, thank you, Lord, for another chance to grow. Go ahead, try it, and see how much better things are. Rather than swimming against the tide, just learn to flow with it. Pretty soon you'll find that you're enjoying life more. And not just that, other people will enjoy being around you more. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.